Hello everyone, and we're not getting a great close yesterday. So we try to push higher and find rejection at the declining 9 and 21. So it probably suggests we will have a higher odds for going lower and before finding supports. Maybe at the weekly 9 EMA or at the daily 50 EMA. So I got stopped out from T right at the gate. But at the same time, I'm still tracking some names showing relative strength and setting up quite nicely, such as this Sterling and Flex. I think these two is looking really nice, and also Fortinet that I'm also tracking yesterday. One thing that I'm like today is the market is opening, I would say flat, so it's slightly up, and it's not gapping up into the declining 9 on the 60-minute charts. And I wish there could be a flush in a first 50 minutes. Like undercutting a low of yesterday would be the best. Now it is bouncing higher, and IWM is really strong. I don't want to be too aggressive today, but IWM is just showing immense strength, and I couldn't ignore it. I I will probably wait for the first 15 minutes. I sit out the first 15 minutes of after after open and see how will kills um find resistance and get rejected. Like I think the first 15 minutes could be a little bit choppy today. Yeah, as I've also I'm pretty heavily long, so it's not I'm not that willing to open too many new positions and trying to get more exposure in case this is the higher low of the base and starting to climb higher. INFQ was pretty strong yesterday, but today it almost giving back all of its gains yesterday. But I don't know whether it's a good pullback buy on INFQ, because the quantums is pretty weak today, but still within the range, and I don't know. I think the next really good level that I would like to focus on is the weekly 9 EMA. And IWM will probably add the 9 EMA if the Qs and SPY is rolling over to the weekly 9. So IGV is opening red, and now it's doing an undercut and rally. But now I think it needs to climb above the EMAs as soon as possible. Like if the 21 starting to uh cross below the 50, and this downtrend cannot be breakthrough, that it's not a good sign for the general market. Semi is also rejecting at the 9 EMA, which is trending lower. So we're seeing the rejection as expected. Next thing that I'd like to see is whether we got some type of a flush into the downside. I would like to see a quick one, and hopefully I will not get stopped out from that many of my positions. And yeah, and I decided to let the stop this to let the hold all my positions and let the stops to guide me through this pullback, and let's see how it goes. So I'm gonna follow my plan and yeah, not trying to do anything stupid during the flush. And things could probably looks pretty ugly if you really get a downside move and the rejection on the cues. I don't know if I'm a like a position trader and like focus more on the longer term swings. I think EMPH right here is a will be a spot that I am then maybe I would take a try. Like taking maybe like 5% uh position sizing for each entry for each buy. So and taking really small risk. Like I sometimes would imagine if I'm trading a really huge account, how would I trade? I think this type of days when it's pulling back and the daily chart looks really ugly, I think it would be the best time for like the big players to come in and take advantage of. Sterling and Fortinet is holding up pretty well. So I believe like 706, 705 would be a level that I'm watching right now. I really wish it can go the market goes a little bit further lower. I don't like it. If it's bouncing right here, it's okay, but like I really prefer it can go further down a little bit more. Like iron here is also a really good spot actually for in a weekly perspective. It looks like it was too late for Sterling already. That is this flag is a little bit it's not that liquid as I expected. It's trading like $1 billion volume yesterday, but zooming in on the 1 minute chart is actually not really that liquid. So I'm looking for any failed breakdowns on Qs and the play on the IWM pullback. If we got a pullback into the 15 minute or the 5 minute 9 EMA, it would be a great spot. And I don't know which one should I take. I think Flex is a really good one, and Sterling is also a really good one. And Quantums today is actually also like pulling back into the 50-day. It could be an entry, but it just has a higher failing rate. RWM is pulling back into the 5 minute 9 EMA. We'll see. Let's see whether we can get the failed breakdown or we continues lower. If we continues lower, then the next probably I will wait for the 705, 706 area for the next support level. Sterling is just having a really wide spread. Really not a fan of this. I'm going with Flex. I really don't like the spread on Sterling. I don't know. Maybe I'm wrong. Like the spread doesn't even matter. But I really not a fan of like a widespread stock. Am I closely running off buying power? Let's see whether I can get one more. Or maybe not. It looks like we are heading lower, but I'm still going to follow my plan and focusing on any failed breakdowns if there's any. Definitely some actions in certain names are not looking really good. Some are looking quite bad, but things can change in the moment in such a volatile period, and we'll see. And remember, I could be very wrong. So if there isn't any bounce, like a sign of finding support and bounce, then I'm not going to do anything and keep buying on the dips, or wait until the market proves it finds support, and and at the same time don't get panic, and I'll keep watching for any potential bounce on the individual names. Sterling is pulling back into the 15-minute 9 EMA. Man, this sterling is just so illiquid. I couldn't get filled. Like the spread is like $12. I don't know. I think Grado and Quantums are also great great opportunities right here. I don't know which one to take. Well, I run out of my buying power. I think that's it. I wish I could have unlimited buying power today. No, I got stopped out from Marvel. Okay, this thing is probably gonna double from here. Man, this Marvel is gonna probably goes to 1,000, and I can't do anything at all. Intel is the one that is looking exceptionally good during this pullback, and with like this type of strength, stock with this type of strength, I really wish I can trail it as long as possible. Owning is another one that is just doing its own thing, living in its own world. Don't know what's going on, but it's going higher. If I got stopped out from IO and Q, I'll probably buy back my Mafel. IO and Q definitely looks pretty weak today, but it's weekly. It's just a really good spot to on a daily 50 EMA, weekly 9 EMA, and this is the handle part of this cup with handle and the first pull back into the 50 EMA. I think the risk reward of buying here is just is solid enough for taking a try. I don't know. I wish it can prove me wrong by doubling it from here. But today is pretty weak right here, right now. I don't know. Some of the software names, the laggard, the weak ones are looks like they're setting up. Firm is breaking out today. The finance software and the fintech names gets pretty strong. Misses them. AMD also looks pretty solid here. The GFS is also setting up quite nicely. BE continues following through after yesterday's pullback into the 9 EMA and the previous highs. Martin, how you are currently so heavily invested? QQQ is below 20 EMA, which is usually not a good sign. Do you think that this is currently just a correction in the market that we will continue in the green? Firstly, I never used a single indicator to determine whether the market is bullish or bearish, is this healthy or not, like is dangerous or safe. I always emphasize like the first thing, the most important thing that I consider or that I would analyze or is the individual stocks section. Definitely yesterday the gap down seemed scary, but if you zoom in, or maybe not zoom in, like we're just scrolling through each of the names, we can see a lot of the stocks it is finding support at the rising EMAs and it is showing strength. TTMI finding support at the 9 EMA and close very strong, despite the fact that the Qs is closing weak. And Dell undercut and reclaim on the 9 EMA. Riot undercut and reclaim on the 9 EMA. And also non-tech stocks like the other sectors are doing very fine. Some of them are actually breaking out yesterday, like biotechs. Finance stocks is also like consolidating above the 9 EMA. That is looking pretty good. It's like building a tiny little flag in the range. Looks like it's finding support and letting the 9 EMA to catch up. And a lot of the names are actually still like above the 21 or like within the base or building higher lows all the time. And the weaker ones is maybe pulling back into the 50 EMA. But most of them on the weekly, they are still very strong. No signs of change in character. This rubric is breaking out yesterday. Nokia is at the 50 EMA. I mean, there are a lot of so many individual names are looking fine. Like if it's not good, then they are definitely fine. Like not even bearish. Yeah, some of them like AOI that is breaking down from the 50 EMA, but it's a relatively smaller amount of stock, and I think in a bull market it is very normal for a leader, like for some of the leaders to slow down and fall apart a bit. And you can easily also, you can tell by the IWM, like from the IWM strength. IWM is a better indicator for breadth, the general market breadth, especially the smaller cap names. And it keeps outperforming the Qs and SPYs since I think maybe after May, like after this pullback, it keeps outperforming, which shows the breadth is not deteriorating. Like the general market is actually improving. So with a higher amount of higher amount of stocks that is going higher, that is like especially the small caps that is showing strength, the odds of getting a bear market or like a deep correction is just statistically lower. And I think it could be like a good sign for like a buying the bounce or buying the reversal. Like IWM today is pulling back into the daily 9 EMA as I've talked about right at the market open. And don't forget that the whole market, like the Qs, is still in an uptrend, like in a pretty strong uptrend. Like there's 9 above 21, 21 above 50. And we're getting a pullback into the weekly 9 EMA. We're not below the 50 or even like below the 150. We are not in the no man's land. And we don't see like a huge amount of like breakdowns in the leaders. And I'm getting a little bit like aggressive today because, as I've mentioned multiple times, is that the market right now loves doing a lockout rally. Like now it's the market's just moving so fast. If you just missing today or maybe the next tomorrow, like the day after tomorrow, after the market starts finding a new uptrend, starting a new uptrend, then you're probably gonna get left out. And I don't want to just let that happen. And the market doesn't like to chop around and like stays within the base for a long time. So I think I will keep doing like entries on this type of days until the market proves is slowing down. And definitely this today is pretty tough. Like it's not an easy day to buy the dip or like to not selling your positions at the weakness, or even like buying into the weakness. It's definitely okay and to miss the entry today. But at least I think one lesson that that you should learn today would be like I think it's better to like really analyze the individual names rather than focusing on one index chart, and don't get fully don't use only one indicator like, oh, the index is under certain EMA, certain SMA, or like the MACD is like is now the fast line is below the I don't know what's the another line called, but like you don't use only single one indicator to determine whether the market is healthy or not, is bullish or not, because the index, the market is actually representing a lot of like many different names, and those names is actually the foundation of the market, what builds the indexes. But with that said, we're still not yet clear all the EMAs on Qs and SPY, and a lot of the mega caps are actually under the EMA, so we could face a little bit of resistance above when we're trying to climb higher, trying to get into the unfilled gap. So the best case scenario is we can get a gap up in the next coming days, and then we buy the intraday dip into the 9 EMA or the 21 EMA, or like the gap created after the gap up. That would be a good entry, like on also like a pullback into the 16-minute 9 EMA if we get a gap up tomorrow, and then we get an intraday pullback. I think the software sector is actually setting up silently, like could be the next leading theme. Have you experimented with non-low of the day stops? I've been finding out lately that I'm stopped out before it felt like some structure or MA. Yes, I definitely have experimented, and I actually used a lot with the non-low of the day stops. A-Lab today is one of the example, and Flex today is another one. Sometimes I just most of the time I used in non-low of day stop is probably because maybe the stop is a little bit too wide from my entry, and actually if I don't have a really solid statistics or figure, but I think the 5-minute the breakout candle low or the 15-minute breakout candle low is works pretty well if you're buying it at the right time. I mean, but you definitely don't know when will be the right time. You can only figure it out after the trade works. So yeah, if you're setting non-low of day stop, you'll definitely have a lower win rate. But it helps me to tighten my stop quite a lot, and I think it's worth it. And I'm okay with re-entry after I got stopped out, and the stock is bouncing back again. You ever wait till the price drop to certain alert level to place order, or if the current stop loss is anywhere less than this, let's say 3%, you would just get in right away without hesitation? If I'm buying pullbacks, most of the time I would wait for the breakouts. Like if um you can go and check my trader line interview this year. I talk about it on the pullback buys. Generally, I wait for the 5 minute or the 15-minute candle breakout. After the stock finds support at the support level, so I generally won't buy the dip on the way down. I wait for it to have the first breakout in the lower time frame first, like to show a certain type of strength. And yeah, so I'm not just blindly buying the falling knife most of the time, but sometimes I don't know, occasionally I would like, maybe I'm just going to like for cipher, I could set an order for near the 25, the low 25s levels, and but it's very occasionally. I see you have so many positions, so in total it can be a lot when indexes free falls. Do you manually sell or hold until stop loss when you see big drop in indexes like yesterday? Um I mean, in the beginning of the stream, I've talked about today's plan, and actually yesterday too. Like on yesterday's stream, I also talk about how will I manage my positions, and that's it. That's I just decided to use to let my stop either my I mean let my stop to decide whether I should sell or not. So either my stop getting hit or I'm keep holding my position, and I have accepted the consequences of like of a market crash or like a really black swan event over another gap down, and then I got stopped out from all of my positions. So in terms of the drawdown, I think it could be pretty big. I don't know, maybe around 25 to 30% if I got stopped out from all of the positions. So the drawdown could be huge. But on the other hand, the probability of like getting another huge gap down and getting stopped out from all of my positions is also quite low. And I mean, if like the stop is, I define my stop before my entry, and this is the level that I think my trade is, that I'm wrong, like that the market is not agreeing with my decision, with my opinions. So that's how the stop works. So if you have just like, if you not trusting your stops and like trying to like outsmart your stops, sometimes you could be like benefits from it, but most of the time you won't, especially in with the market still within the range and it's not extended like the late May or the early June. I would only like consider selling or even closing my position early only when the market is going extended, or like really extended. And also I think it's very important and kind of inevitable to hold through the pullbacks, to hold through the red days, the ugly days. If you wanted to ride a big trend, like me back then is I really hate the pullback. I generally just going to sell my positions like on the dates like yesterday or even maybe today, and then I would miss the remaining. Like I would sell it maybe only at the 1/3 of the move, and the stock keeps going high after the pullback. For example, like Nebius pulls back and then goes higher, pulls back and goes higher. And if you keep selling your winners or the leaders every pullback, every wet ugly red days, you're not going to capture a really huge gain or really like a exceptional risk reward. But I mean, at first, like at the beginning, you don't need to like really like hold all the position like me, like what I did. You can like sell some and hold some, and gradually you will learn uh, whether you should really stomach the big red days, or for you it's better to like really sell more into the strength, and then selling more into strength, and then you can it is easier to hold through the pullbacks, maybe with a smaller position size and some realized profits. Yeah, I think it's very important to like you don't really need to like copy what I'm doing. I truly believe like every trader should have their own style of trading, have their own types of like personality, the risk appetite, and their favorite approach to trading, like no matter the rules of selling or entry. So when you just learn from others, when you just learning something new from other traders, I think one thing is really important is to like think twice and to evaluate whether this approach suits your personality or style, and if not, then are there anything that you can tweak a little bit, like to modify it a little bit? If you really don't like buying into the dips today, then how about like not selling your positions in the days like today? You don't need to 100% mimic trader A or trader B, and like always question first, and then if you agree with it, then you can then try to like implement or integrate it with your current approach, your current style, and you don't need to like use like completely copy 100% of it. Just take maybe part of it is completely fine. And like for example, I think Mark Minervini have always mentioned like something like he ignored the indices, or like don't look at the index, and I think that's not true to me. And a lot of traders is saying something like market is stays the same. Markets never changed like compared to 100 years ago, and I also disagree with it. I think it's not true, and yeah, like there are a lot of like sayings or like the rules from other traders that I've learned or I've heard about, but I disagree. I think disagreeing with other traders is one of the most important process to improve your trading. Like you really need to like digest, like think twice, figuring out whether like it's true or not is a really good process of learning in trading, but not like completely blindly follow what others are talking about or sharing. I don't have time to sit all day in front of the screen. I want to spend only 1 hour during trading hours. Do you take trades in the first hour only or later as well? Then definitely I would some trades that I would take like in the after the first hour. But you have to also spare some time for the pre-market scans and watch list management. I think that also maybe needs 30 minutes or an hour. And if you decided to like spend only the first hour during the trading hours, then definitely you will get a smaller window of opportunities. You'll get a smaller amount of entries, and you can miss some opportunities. And yeah, that's the trade-off. You have to accept it, and I think it's definitely okay for like just spending the first hour of the trading day. Do you read the Kulamagi chapter in the new market research book? The book has arrived. I've bought the book, and the book I just received the book yesterday, but I haven't read it. I think I would do it. I don't know, maybe later this week or next month. How do you manage positions or keep in touch with the market while when traveling the way you did last week? Last week I tried not to keep in touch with the market. I just letting my stop to help me to manage it. So when it stops me out, it stops me out. When it doesn't, then I just keep holding my positions. But generally, my advice on trading while traveling is trying to, I think less is more. Really, I think if you're traveling, just focus on the travel. Just trying to relax and enjoy your time and focus again after you have been back in front of your screen. Like my trades when I was traveling, my trades that I made when I was traveling was quite bad generally. Maybe you really need to reduce the number of trades and really take the best out of the best trades that you think that like this the perfect one. Like only take the really A+ setup or just completely avoid trading. Martinlukkt, you trading, I see so many mistakes and so many over trading and chasing. I don't understand how you're up because I see you lose and take bad trades, only feel good trades. I think this two things. Losing trades doesn't mean bad trades, and the second, win lose more and win big. And yeah, and the third one, like if I can like achieve a triple digit return with so many mistakes, like I'm not even smart, I'm not even like really specialized in I don't know, maybe semiconductors like physics or maths or any of the tech things. And I even like always like pulling out the GME chart. I even bought GME on the top at the top of the move. It's just a perfect example of like just keep correcting your mistakes, and trading doesn't require like a really high IQ or like or really good technical skills, etc. It's just you versus you, and you keeps improving your own mistakes and suck less, make less mistakes, and then you gradually improve. Do you ever take the time to analyze the trade you lost? Definitely. If you stop looking at your losing trades, if you stop finding out your own mistakes, you're doomed to fail. I wish I can keep my words like maybe like 5 years from now and 10 years from now. Like I think once a trader stop improving at his or her own mistakes and not trying to find out his room for improvement, then then it will be the end of the trading journey, no matter how much they achieved in the past. Our Q is pretty weak. It doesn't bounce quickly enough and strong enough, it's just going sideways near the support level, and it's a sign of weakness. I'm really not a fan of it, and looks like the market is finding some rejection at the 60-minute 9 EMA. So it's still too early to tell whether the market is finding support right here or not. The best case scenario is I think going sideways is already very good enough. But at the same time, if the market does really go for the downside, then it's also important to note that the 9 EMA is on the weekly. The 9 weekly EMA is slightly below the current price, and it's not the end of the day. I'm still not a big fan of that quantum's reaction so far. You think you're doing a good job for not overtrading this year. It's kind of frustrating to avoid that, especially on the losing streak. Sometimes I know I should not take many new entries when extended. I think I'm far from doing a good job for not overtrading, but I am doing a better job compared to me last year. My number of trades reduced by around 15 to 20% this year, like compared to the same period last year. But I think like in the first part of the year, I did quite bad on the choppy periods, during the choppy periods, and yeah, that did overtrade a lot during this choppy period, and but luckily we get a really nice trend afterwards, and so I would say I'm doing okay. And sometimes you shouldn't take many new entries when extended. It really takes time. It really takes time to completely avoid like chasing or like buying in the extended move. And I think you have already done a good job on recognizing it. I think really like one step at a time. I keep overtrade like since the day one of my trading journey. So I can only say it takes time, and for each bad trades that you took, like if you really study your losing trades seriously, and really take the losses and the lessons seriously, I think gradually you'll definitely improve your entry, and like just to really stop chasing the standard names, or like buying randomly on a random green day, and also another thing is I mean there are lots of plenty of opportunities in the market, especially in the bull market. Like I often like there are lots of the times that I've run out of buying power, that I saw good opportunities. I really wanted to buy it, but I just can't. And like they always remind me of like there are always another opportunities in the market. If you missed one, or missed two, missed five, tens of like I mean, if maybe even hundreds of opportunities in a bull market, and it's okay to miss some of them. And the worst thing is you chase or you overtrade certain stock, and then you got stopped out, and it just hurts your it doesn't only hurts your financial capital, but it also hurts your mental capital as well. And you will become hesitate. You'll hesitate and not trusting the next opportunities. I think that will be the worst case. worst case scenario, and I really don't want that to happen. So I would choose to like miss one and then wait for the another one to evolve, to show up, instead of chasing and then got stopped out and then missed the other one. So this is the end of today's stream. We got Micron earnings after hours, and hope for the best. I'm really happy to like. I think I'm really happy for today's execution. Like how I follow the plan and I'm not getting panicked during the weakness, during the down candles. I think this is I think I improved quite a lot on this type of days. Like I think me 1 or 2 years ago, I often got shaken out during this pullback periods. And I think I think hopefully today can demonstrate like discipline or following the plan, or like staying calm when the market gets volatile. But always remember the best opportunities show up during the pullback, during the weakness. And I think it's similar to the first few days of the bounce up in the early April. I think not many of the traders are getting bullish enough, and then they missed the lockout rally. I think here, not 100%. We're getting like we're starting the next leg up right after here, but I think it's not a place that we should get super bearish and completely ignore the potential opportunities to the upside. So thank you guys for coming, and see you in the next one.